welcome back to this week's Manager's Thoughts, coming to you from Kelly at Synergy Asset Management. We're super excited to bring you another week of economic and market updates, so let's just get right into it. Alrighty, so just jumping into a quick market update. Despite the shortened week in honor of Dr. King, we still had quite a busy week. So we got a slew of economic data points coming out this week. We got retail sales, producer price index, housing starts, housing permits, existing home sales, and many others. So we also saw Q4 earnings season kind of get into full swing this week. And so both of those things, the economic data points coming out as well as earnings, definitely had an impact on markets this week. For the week ending Friday, January 20th, though, the S&P ended down about 0.88%. The Dow Jones Industrial Average was down about 2.85%. The NASDAQ was up actually about 0.36%, and the 10-year U.S. Treasury yield fell almost 4% this week. So definitely some interesting moves in the markets we've had. Thursday was a really negative day, while Friday ended up really positive. So definitely an interesting week, and I just want to get a little bit more into detail of some economic updates this week, so getting right into that. So jumping right into some economic news of this week specifically, on Wednesday morning we got retail sales data for the month of December. It came in at negative 1.1% month over month, and so this was a little bit lower than the estimates of negative 0.9%. So just another good sign that the economy is starting to slow down. Not a good sign for retailers, but a good sign that the Fed's interest rate hikes are working. So this is down again from, you can see in the chart there, from November, about a negative 1% month over month retail sales decline. And so we're really speeding up that spending decline as consumers are kind of more increasingly aware of what's going on in the economy and maybe holding back on a little bit of spending. So really important data to look at as we move up throughout the year, and stuff that the Fed is going to be definitely looking at in their next meeting for sure. In addition to the retail sales data on Wednesday, we also got the producer price index for the month of December too. So it came in at negative 0.5% month over month. So this was much lower than the expectations of negative 0.1% month over month. And this was also down from the November reading of about plus 0.2%. So here you can see in the chart that goods are really pulling down this PPI reading for producers. It was almost negative 2% month over month decline from November to December in goods prices to producers. So definitely something we want to keep track of, and we'll definitely factor into what consumers feel in that CPI data next month. So definitely keeping track of what producers are experiencing in terms of inflation as we look into this new year. In addition to the retail sales data and December PPI, we also got the permits and housing starts data for the month of December. And so building permits came in at 1.33 million, which is about 1.5% lower than expectations. And then on the other hand, housing starts came in at 1.38 million, and this was about 2% higher than expectations. And so when we look on a year-over-year basis, though, there's been some significant moves. You can't see all of that in that chart there, but from December 2021 to December 2022, year over year, we saw building permits decline about 29.9% over the year. So on the other hand, housing starts from December 2021 to 2022 declined about 21.8%. So not only are higher interest rates impacting real estate prices, but it's definitely impacting the starts, the permits, and also the completions that happen. So definitely things to monitor and keep track of as we continue to manage our portfolios. One final economic update of this week, kind of in the same lines as the housing starts and permits that we just talked about. Existing home sales came out for the month of December too. So came in just about 4.02 million compared to the 3.95 million expected. And so this was a little bit higher than expectations, but year over year, this was a 34% decrease. You can see that from December 2021. So it was also a 1.5% decrease from just November. So definitely big moves in the housing markets. Here you can see in the chart there that the median sales price of a home came up about 2.3% year over year, which is really slow compared to the really fast home price growth that we've seen in 2020 and 2021 and even into early 2022. So again, housing is such an interest rate sensitive market. So obviously this is going to feel super drastic sometimes, but we're just looking forward to continuing to watch these different market news and keep track of all this as we continue to monitor and manage to the best of our ability. Here at Synergy, as always, we are constantly watching all these news about economic updates and different data points as they roll out. And so we're super grateful to be able to manage our portfolios accordingly to these economic updates. And especially as we go into Q4 earnings season here, as we started Q4 earnings season, we are really looking forward to managing to the best of our abilities. Thank you for tuning in to our Synergy Manager's Thoughts this week, and we look forward to providing another update pretty soon.